So we have to look into the concept and the need for assurance. That is, why are we auditing? Why do we need to audit? Then after that, professional ethics and code of conduct will be looked at. Professional ethics and code of conduct will be looked at. Then obtaining an engagement. How do auditors get jobs, which we call assignments? What are the rules and regulations that surround it? Then we move to internal audit. Internal audit. Can the internal audit be outsourced? Who qualifies to be an internal auditor? What are the requirements for internal audit to function? And everything that surrounds it. Those are the things that we need to look at for under internal audit. Then we move on to audit planning and risk assessment. That is, before auditor could get job done, they must look at a lot of things that surround that particular assignment or that particular client, in form of their background, their history, and things that surround them must be looked at. Then after that, we go to evidence and sampling, because the truth of the matter is the work that people have done for a whole year, 2 or 3 people as auditor cannot just come, use 1-2 weeks and believe that they've done everything. So auditors always sample and base their opinion on the samples that they've tested. So we are going to examine evidence and sampling. Then we move on to internal control. Basically, internal control are the way that management thought best that they could have managed the organization without or with minimal losses, without anything that could unnecessarily make the organization to be unprofitable. So that is internal control. We will look at that too. Then test of control. We will do the test of the control to know whether the internal control that organization or management have put in place is working the way they want it to be. And if it's not working, why is it not working? What should we do to make it stronger and the like? And what are the approaches? Those are the things that we are going to look at under test of controls. Then from test of control, we move to substantive testing. So the first we deal with introducing us to substantive testing. That is, looking at an aspect of an organization and ensuring that all is well. That is substantive testing. Just as the name indicates, substantiate. We go deeper into a particular matter that we want to focus on. Then, substantive procedure 2, now based on our financial statements, the non-current assets will be looked at, the current assets will be looked at, other areas of financial like share capital and the like will be looked at. And last but not the least, I always say, any auditor that will not report has not done any job. Auditor must report, and audit must be reported with documentation. So auditor cannot say I've worked without documenting it. There must be a report. So the last chapter in our course is audit finalization and reporting. Audit finalization and reporting. Please, if we are together, say hi so that I can know and continue. Please, Madam Irene.
Yeah, we are together. I've touched high. I have to move so I can listen because I'm writing too. I've touched high.
Oh, great. Okay, great. So we now move on to our slide, which is the first chapter, introducing us to audit. So I hope you could see my slide. Introduction to audit. The meaning of assurance. We say audit and assurance. So what do we really mean by assurance? It simply means confidence. Assisting somebody or an organization to put confidence in something. We should not forget that the management are the people that runs the organization on day-to-day basis, but the shareholders are the owner of the business. And many times, especially when the organization is large, they were hardly around. They come occasionally to the organization. So how would they vouch for what they do not know much about? So that is why they usually ask auditor to come between the management and the owners of the organization to ensure and give them a third person opinion that everything is okay. So I always tell the history of audit, and I always let students know that audit actually is not coming from the background of financial. Audit is coming from agriculture. Basically, audit is as old as almost we can say humanity. It's as old as humanity, because it's all about the tenants of the land and the landlord, then, which are always or usually the kings and the lord. And kings don't farm, and the farmers are not king, and they don't possess land. It's only the lord that owns the land. So the person that needs the land does not have the land, and the person that has the land doesn't work. So how can we do this? So that is why the tenants, which is still even up until this moment, and that's why we still have audit around, tenant and landlord matter will not cease. So at the onset, the landlord may be like, okay, anything you plant on this my land, at the end of the year, I want 12 baskets. And maybe the tenant has been able to fulfill his or her obligation, but a time comes that maybe as a result of drought, maybe the land is not getting as enriched as before, and it needs to be followed. And at the end of the year, the tenant comes back with, Oga, I can only have 7 this year to give you, please. And the landlord said, no, you can't short ration me. You must just give me my basket and things like that. And the tenant was like, but see, this is what we produce. People, let me tell him. And he said, no, people are not involved. What we need to do is, let's look for somebody that is of this so quality that could come between us. And that is how they call for intermediator. And it is the intermediator that stands between the landlord and the tenant, then, that changes name to become the auditor and becomes the profession that we have today. So audit is coming from the background of agriculture, and it simply means putting confidence on something. The practitioner, I read from my note, I hope you can see it. The practitioner's opinion is to assure that the information can be relied on and is credible. The practitioner's opinion is to ensure that the information that was given to the auditor to audit can be relied on and credible. And if it's not credible, the auditor should say so, that it's not credible, so that the people that engage him could easily know and know what. Okay, in an assurance engagement, for every assurance engagement, there are usually some parties, and there will always be the person that engage us. Usually is the owner of the business, the shareholders, but they will always use the hand of the management to engage us. That is the MDs, the accountants there, and the like. In an assurance engagement, a practitioner is engaged by one party to give an opinion, and we should please know in exam, if it comes out, that the reason we are engaged is to form an opinion. Every other thing is secondary. It's to form an opinion whether the financial statement is fairly presented, and is true. Yeah, and before I forget, because audit is coming from the background of agric, anything can be audited. So audit is not limited to financial, even though we are financial people. Any aspect of work, any organization can be audited. That's why we have IT auditor, we have medical auditor, we have law auditors, we have all kinds of audits, because anything basically can actually be audited that involves human judgment. I read from our notes. Madam Irene, can you see the notes? Please say I if you can see it.
I can see it. I can see it.
Oh, okay. The opinion is an expression of assurance. That is when auditor say, okay, the statement is fairly presented. That opinion is giving the shareholders assurance, or what we can call comfort. Put them in comfortable position to decide about the information that has been reviewed. So it's auditor that will review it. And basically we have various types of audits which we are going to get towards the end of this slide. So statutory audit is the most commonest anyway. Every organization at year end, majority of the time is December, and it could be any other month in the year. Usually we do a statutory audit, but we should please note that statutory audit is actually compulsory for a public limited organization. It is compulsory for public limited organization. Why other sole proprietorship or SMEs usually engage auditor is because of the benefits that they could derive in it, not that maybe is statutory to them. But for public interest organization, which in Nigeria we call public liability company, PLCs, it is a statute. It is of a statute or of a mandate by law to do it. A statutory audit is one form of an assurance engagement. I want to believe that now we know what an assurance engagement is. That is putting confidence on something. The shareholders of a company do not accept without question. Just like anybody too will question, okay, why is this? Why do we have this figure and the like? The statutory audit provides assurance about the quality of the information being presented to the board or to the share owners. And we should know another thing, that is only in assurance engagement and audit specifically that we can have high or reasonable level of assurance. So that takes us, even though it's still underneath this slide, let's quickly just deal with it. There are levels of assurance that could be given by an auditor or auditors, but the highest that we can have is reasonable level of assurance, and could only be gotten through assurance engagement. Every other engagement apart from that could only give us lower level of assurance or limited level of assurance, and in some occasion we can call it to negative assurance. So now that we know assurance engagement, what are the examples of non-audit assurance engagement now? Now that we know the assurance, what of non-assurance? Example of non-assurance engagement, that is, auditor does not really need to form an opinion. That's what it simply means. Don't forget that compliance or putting comfort and reliance on something is what assurance means. So when we now say non-audit assurance, so we mean it's not necessary that we put our opinion to it. So what are those engagements that could be of that nature? Corporate social responsibility, like is getting publicly known nowadays. Many organizations want to comply with societal help. So this is what corporate social responsibility audits could cover. And it will vary from an organization to the other depending on what they want, the aspects of social life they want to go into. Environmental policy too could be audited. What do we want to do at the beginning of the year concerning the environment? At what level and what have we achieved? That is environmental. Employment policy, like HR policy, if we have to review it, draft it, and things like that, it will fall under non-audit assurance engagement. And we do not necessarily need, after we finish the assignment, need to put our opinion down in paper. Non-financial performance indicators too, like organizational KPI that are not financial. We may not necessarily need to put our opinion down. So now, I started earlier before this slide, elements of an assurance engagement. What are the elements that we find in assurance engagement? We find, first of all, we will find people. In any transaction, people must be involved. No transaction can take place without people, just as we know. So we have parties to the engagement, and we always have three parties. We have the person that is engaging the auditor, that is the share owner, the share owners or the shareholder. We have the management that is representing them. Majority of the time, they are the one that auditor deal with directly. And we have, last but not the least, the auditor itself, the person that is being engaged. So, and even though there are three, their first factor or element in assurance engagement, people. People. We should not forget people. So the next one is the subject matter. That is, what do we really want to audit? Like I said, anything can be audited, not necessarily financial. So if we are auditing financial statements, our subject matter will be audited financial statements. If we are auditing, let's say, tax, is our subject matter becomes tax. If we are auditing petrol or petroleum industry or petroleum utilization and the like, it becomes the subject matter. If we go into medicine, it becomes the subject matter. Okay, after that, we go into criteria or suitable criteria. When we say criteria, what we simply mean is, what are the things or yardstick, like the big grammar people will say, what are the things that we are projecting at, or we want this organization to be at par with our yardstick. So those are the criteria. What standard do we have where our client operates? If our client is operating in, let's say, bank, then CBN, prudential guideline, and the like will be part of our criteria. So criteria simply mean the set standard we are measuring the information against. Like now we have our IFRS and the like. After that, another factor or element in our engagement is evidence. Evidence. Auditor cannot just say, okay, I've looked at it, in my opinion, and this like that is good, is bad. How did you come about your opinion? Auditor must gather evidence. This is to back up the assurance work with facts to support practitioners' opinion. The evidence must be sufficient, it must be relevant, and it must be appropriate. We are going to get to all those ones in detail because evidence and the like is a whole chapter on its own, and it's one of our core subjects too. Last but not the least is we must report. It's part of the elements in every engagement. We must report, and like I always say, it must be in writing. Let me stop here while I hear your voice. Is everything okay? Can you hear me? Feedback, please, before we move on.
Yeah, I'm cool. Go ahead.
Okay.
I'm cool.
Okay. So, audit now, as a branch of assurance, in fact, key assurance engagement, is an independent examination of financial statements of an organization with a view of expressing an opinion on the financial statement. So, audit basically have some key word in its definition. An auditor must be independent so that bias or biases could be minimized. An auditor must be independent. We are going to get there too. How must he, or to what extent must he or she be independent? Financial statement, we are financial people, so our audit is financial statement of an organization, and our view, the aim, the sole aim of any audit, first of all and primarily, is to express an opinion, which will be independent opinion too. Please, we should not forget. ISA 200, which is our latest international standard on auditing, 200, is expecting the state that the purpose of an audit is to enhance the degree of confidence of intended users in the financial statement. To enhance the degree of their confidence so that they will not make error in judgment based on what the management had presented to them. So, what are the objectives? Why do we audit? Why? Just like I said, it's not compulsory for some organizations to audit, but because of the benefit of audit, they usually audit themselves. Apart from statutory audit for the PLCs. So, why do we audit? Objective of an audit. The primary purpose, like I said, is to form or express an independent opinion. Of course, too, to prevent error, detect fraud. The general advantage of audit is actually so numerous. It adds credibility to accounts, which we all agree on. Detection of error and fraud. Professional advice, especially that professional advice, because many organizations, especially the SMEs, they usually start, I just want to start this thing, which is good, and they start, but a lot of things are not put into consideration, and along the line they run into troubles and even unprofitable business sometimes. So professional advice could take care of that if they engage auditor. Auditor comes with various experience because auditor always move around that why don't you do it this way, do it this way. If you do it this way, it will have been better and things like that. Because auditor is believed to be versatile, and ordinarily auditor should be versatile because they have privilege of moving around so many organizations and see what they are doing. So professional advice come handy as an advantage for any organization that engage auditor. Also, it makes it easy to source for fund. Of course, especially in Nigeria, majority of organizations that are not mandated to audit because of the bank loan or the like. So as source of fund. Of course, tax assessment, we audit the tax, IFRS, LIRS. They will not be coming with best of judgment again because they can rely on the determined figure that the auditor has given and signed off on the audited financial statement. Of course, anything that has advantage must have disadvantage in life, and one of the disadvantage of audits is it comes with fee, so it increases the cost, and that's why auditor must always look at value addition to anything they are doing. If not, the client will begin to see auditor as burden because they come as cost to the organization. But when the organizations see or receive value for their service, so auditor must always ensure that they deliver value. The deliver value is very key. If not, his audit fee will stand as disadvantage to the industry. Of course, another demerit, it's inconvenience staff because auditors come with a lot of questions. Why did you do this? Okay, show me this, present this document. When the authorization is not done, okay, they approve it, they did not authorize. Okay, who initiates it? And so it's inconvenience staff. Like generally in life, people don't like to be questioned. And when auditor come with a lot of questions, so it's part of the disadvantage. Of course, sharing of information. Some information are so sensitive and organizations don't like to part with it. So even with auditor, there's a level that it gets to that they may not be ready to come out boldly concerning their secret information of their operation. Levels of assurance, like I mentioned, we have various degrees of assurance or confidence that we can give on information presented to us. But the highest level, which is high level, can only be gotten from assurance engagement. Basically, I read from my notes, there are two levels of assurance: high level of assurance or reasonable level of assurance, which can only be gotten from assurance engagement. We can equally have moderate level of assurance or limited level of assurance. Sometimes we can call it negative level of assurance. So from where can we get all this one? We can get them from non-audit assignments or non-audit engagement. So we can only get high level or reasonable level of assurance from assurance engagement. So some example of non-assurance engagement we could see here: review of data, agreed upon procedure, which has more depth. Don't know. Do you want us to deal with it now, Madam Irene?
Hello, you can your choice, sir. And if you want us to deal with it, if you can deal with it later, let's go ahead with the next one. Later we do it.
Okay. So I'm thinking we should do it probably next week so that we will lay the foundation.
Okay.
It's already in our notes. I'll come back to it.
Are you going to share this note with us? Are you going to share this note with me?
Of course.
Okay.
Daily people pay, I will give them the details.
Okay.
Of course, your own is bank.
But you've not sent your account number. So. You've not sent your account number.
Yeah.
I said that.
I will.
Okay, no problem.
Thank you.
No problem.
Okay. So let's move on. So these are some of the non-assurance engagement like review, agreed upon, compilation, and the like. So let's deal with classes of audit. Basically, audit can be categorized into two by nature, even though I put three, and there's a reason for that. Statutory audit and private audit. You could see the comma section that relates to it, and you will find that internal audit has no criteria, like we use the as part of the element. It doesn't have any comma backing it up. So we can classify audit basically into two: statutory audit and private audit. Statutory audit is what we've been talking about, that is mandated, and I said PLCs are actually mandated. We go to that section of CAMA. Public interest organizations are the one that government or the regulators want that from every year. But private owned organization, because of other benefits that audit comes with, like that one that we mentioned, funding, bank loan, or public image to show that okay, they are running the organization as should be and the like, all those benefits they engage auditor, but not on the statutory level. It's a private audit, and internal audits stand between the two, because before statutory or before private audit, which comes at year end, internal auditor can be engaged. Internal auditor can come quarterly. Internal auditor can reside like a resident lawyer or resident engineer, can reside in the domain of the client and work with them as the operations progress too. So that's why I put it as part of classification. But basically, audit can be categorized into two by nature. Now, audit by methods is very plenty, even though I named a few of them. So by approach, that is the way an auditor go about delivering his or her work. That is the approach. So it could be final audit, it could be interim audit, it could be continuous audit, it could be procedural audit, it could be balance sheet audit, it could be management audit, and it could be a lot more. So let's trash the approaches out now. Final audit. When we are talking about final audit, basically we are talking about an audit that comes at year end. Please don't forget, and from the name final, a final audit will come at year end. And that is the major distinction between a final audit and the next level of audit or approach to audit, interim audit. While final audit comes at the year end, interim audit can come at any time. Usually, an organization can decide with their auditor that, okay, let our interim audit be scheduled quarterly. So, January to March, auditor will appear maybe early April and the like and deal with it. So the operations of April, May, June, auditor will come in July and trash it out like that. So it's quarterly. So at the final year end, by December, early January, auditor will appear to validate whatsoever they've done. So that is interim audit. So, but if auditor just appear once in a year, at maybe January, February, or whenever the time that they call for auditor, is the final audit. But when they break it down like that, especially for financial industry like banks, insurance organization, they usually do interim audits because they are part of their criteria of the regulator is that they must give and submit interim or quarterly audit or quarterly financial, and they cannot just rely on it without auditor vouching for it. So that is why they run both final audit and interim audit. We have continuous audit too, and nowadays, especially with the real time that all the organizations are going to working from home and the like, the whole world has shifted, and soon the major audit we are going to have now is going to be continuous audit. That is real-time audit. It's audit that as transactions are being done, audit is coming within it to check it. So that is continuous audit. It keeps rolling. It keeps rolling. That is continuous audit. Procedural audit. Procedural audit. When we are talking about procedural audits, we are talking about transactionary audit. That is procedure. We want to check, okay, what are the processes put down if we want to get this job done in this organization? What does the management require? This step, this step, this step. So procedural audit comes to check it. If we need to take 3 steps, do we take the steps? And if we took 2 and leave 1 undone, why? So that is procedural audit, and is a branch of test of control, substantive test and the like. Balance sheet audit. This is the rarest, it's uncommon, and it hardly happens. Balance sheet audit hardly happen because it can only be used in a situation where the auditor is so sure that internal control is almost 100% strong, which majority of the case will not be, because we are all human beings. We know that it's only in heaven that processes are error-proof. So, without being error-proof, balance sheet audits will not be taken on because it's a big risk of assessment for auditor, and auditor can pay dearly for it. So that is why it's uncommon. But basically, if an auditor wants to approach an audit based on balance sheet audit, they only need to present or have balance sheet and attest to it. It's so simple to do it, but because of the liability that could arise as a result of it, auditors rarely go for it. Even in the toughest of deadline, auditor will still say, let me test some procedure before I could give or express opinion. But it's part of audit. It could be done. It's an audit approach, but we rarely use it because of that purpose, the liability that could arise as a result of using it. Last but not the least that I put down, management audit. So management audit is encompassing. Unlike the financial audit, the auditor appear and just do 2 or 3 weeks, or internal audit, the auditor appear and concentrate, interim audit rather, and concentrate on the financial. Management audit is encompassing. Management audit looks into all aspects of the operations of an organization. Maybe I should come again. Management audit looks into every aspect of organization's transaction, work, procedure, and the like. So when we are talking about management audit now, an auditor or a consultant that is engaged in management audit will look into sales, we look into marketing departments, we look into operations, we look into financials, we look into HR, we look into board matter, hierarchy, and everything that surrounds it. We look into governance, we look into social responsibility. We look, it's encompassing, and because of everything that surrounds it, the fee and the time and everything, organization hardly carry out management audits. If they will carry it out, because I'm a major internal auditor, even by experience, organization will use management, we do management audit using the internal auditor that reside with them, so that he or she or the department as a whole, internal audit as a department, can look critically into the whole operations of the organization. So that may minimize the fee, because the internal auditor or auditors will only collect their salary at the end of the month, unlike engaging an outside consultant. So that is management audit, is encompassing, and just like internal auditor must be so diversified in their approach, look into every aspect of organization. So it's good that management audit should be done by internal audit. It will save time, cost, and the like. But it may have one constraint by my experience. This may just be by a digression, but because you are an experienced person too, using an internal auditor to carry out management audits may have a risk, in the sense that may not be able to go into board matters. Don't forget, the board are the people that are engaging, so they are his or her boss. So asking them about how do they come about this sitting allowance and things like that may become out of bound, which ordinarily external consultants will have dived into. So that may be one of the limitations that internal audit may experience in fulfilling their obligation when it comes to that aspect of audit. Okay, so let me hear from you, because my explanation summarizes the slides that are under. Let me hear from you. Are we still together?
Hello, we are together. We are. Sorry, hello, we are together, Gbenga.
Great.
Yeah, I wanted to. I said after that I'll ask you more about this continuous audit. What you talked about, I didn't quite get it. When you were discussing it, I had a bit of distraction from my kids, so I didn't pick continuous audit.
Okay.
Yeah.
So let me quickly go back to that. Then we look at one or two advantages of all these approaches. Then I think we should call it a day from there, because it's almost 2. Okay. Continuous audit. Continuous audit is an audit engagement or assignment that it keeps rolling. And I said continuous audit is actually where the word is right now, like the e-commerce, the Kongas of Nigeria, the Jumia of Nigeria, and the like. They must engage in real-time audit, which is continuous audit. Like the final audit, it comes at the end of the year. Interim audits will be agreed on, maybe quarterly, biannual, dual, and things like that. But continuous audit simply means as transactions are going on and being executed, the audit is validating it. If there are issues, is flagging it. So continuous audit keeps rolling. It doesn't stop. Like every other aspect, like final audit stops at year end, interim audit comes quarterly, procedural audit look for that particular procedure and deal with it. Balance sheet audit just come at once and take balance sheet and audit it. Management audit is encompassing and broader than continuous audit. But continuous audit is audit of transaction that keeps rolling. So as transactions keep piling, also the continuous audit keeps rolling. So it doesn't stop. It doesn't stop. It keeps moving with the transaction. And that is where the whole world is now. Auditors are online. They have their tools online now. So as things are going wrong, they flag it. And if it's okay, they let it pass. So we are in the era of continuous audit.
Okay, sir. But can we now say that internal auditors, yes, can we say that internal auditors of an organization carry out continuous audit?
Yes, they could. In fact, it's economical for them. It's economical for the organization, the part of organization, to use continuous audit.
Okay.
You understand? Because they are residing.
Yes. Yeah, they are residing, yes. But when you come, you also saying something in management audit. That it's expensive for the management to bring out an external auditor to carry out management audit. Am I correct?
Yes. Yes.
So why is it
because of the volume. Like I said, management audit encompassing. Like every other one that we've spoken about, we look at one or two aspects of operations. Management audit is just like management. A management staff will not say, okay, because I'm in account, I will not participate in sales, or I will not participate in this, because that is saddled with responsibility of ensuring the organization is sound. So management audit is encompassing to ensure that every aspect of the organization is sound, be it HR, be it finance, be it sales, be it marketing, be it the core operation. So it's so broad. Be it the board operations.
Okay.
Do you now get it?
Yes, sir. I do.
Okay. So basically, the only thing we've not dealt with are some of the advantages and disadvantages of different approaches, because every approach has its advantage and disadvantage. Like that of balance sheet audit, its disadvantage is it comes with heavy liability on the part of auditor. But it may be good on the part of the management, because it speeds up their audit. Like, let's say they have deadline on Monday, and the audit has not been done or attested to today. So the best an auditor can do is balance sheet audit. But he or she or the firm as a whole is taking heavier risk. So, but it may be speedy on the part of the client. Like final audit now may be advantageous in the sense that auditors just come at once. Staff are not so much disturbed. It may come with a bit of a moderate fee, but it has a disadvantage in the sense that auditor will only do sampling, because unless we want to deceive ourselves, if 10-20 people have worked over a year and 2 people are sent just to review what they've done, and they believe that they'll be able to do 100%, if they tell clients that, we know that is almost impossible, humanly speaking. So auditor for final audit, we only do sampling. That's why a chapter is dedicated to evidence and sampling in this course. Are we together?
Yes, we are. We are together.
Okay. So that is disadvantage of final audit. Let's quickly check merit and demerit of interim audit. Now you can participate because we are just reviewing. This is considered interim audits. Okay, like I've already mentioned it. The disadvantage, it is time consuming. Interim is time consuming. Unlike final audit, that auditor will appear once, like the beginning of a new year to validate last year. Interim audits, at least they will come, if they come quarterly, they will come 4 times. If they come biannual, they will come 2 times. If they come every 2 months, they will come 6 times. So it's time consuming, and as it's time consuming too, is resources depleting too. Because as they are coming, at least they will hit, majority of the time, organizations do feed the auditor apart from their fee. You know, just a normal human service. They will distract the staff for 1 or 2, 3 or a week that they will be around, and they will do that for 4 times in a year or 6 times in a year. So it comes with all those disadvantages, but it has its advantage on the part of the organization in the sense that their operations will be more well looked into. 2, they can easily meet their deadline, because if they've carried out first quarter, second quarter, third quarter interim audit, by the time, if let's say by their regulation they have deadline of March, by January ending, the whole audit is completed, because auditor will just come for last quarter, October, November, December, join it together with what they've done before and express opinion. So it has that advantage too. Okay, continuous audit. One of its advantages is errors are detected faster. I want to believe you will agree with me. If transactions are taking place and auditors are going through it minimizes, it minimizes error and it could be detected faster. It makes final audit even faster too, because they've done a lot of work during the year already. Publication of continuous financial figure is made simple or possible, so it's simpler. Financials can get out on time. It makes final audit faster. Errors can easily be detected and faster. Disadvantage: figures may be altered fraudulently after audit. This is because the audit work and the business operation continues simultaneously. You know, a lot is happening at the same time. So it's possible to have an oversight. It's possible because the staff that are not auditors know that, okay, auditor has checked this. Before he comes back, he quickly slots in another thing into what he or she had checked to be part of it. So that is what we call like fraudulent after the audit. So that's one of the disadvantages. Another disadvantage is not too convenient for client staff, because auditor keeps coming back. Last but not the least, it involves extensive note taking, because as they are operating, they are taking notes, they are flagging issues. So invariably, it's going to slow down the operations of the organization. Yes. Of course, procedural audit, we have advantage and disadvantage that is similar to the one we just discussed too. This is focused on the effectiveness of internal control in place. It is an audit of process, like I said, it's transactionary, and procedures that examine the adequacy of control changes to control and procedure. So it has similar, because it follows some trend too. So it takes time. It takes time of the staff involved too, and the like. So procedural audit too is good if internal auditor take charge of it. Balance sheet audit, like I said, is very advantageous on the part of clients. It makes things faster, deadline can easily be met, obligations can easily be met, but the disadvantage, especially on the part of the auditor, is risk, high risk, because a lot could have been overlooked because they only took balance sheets and express opinion. It saves time as normal audit procedures are not required and vouching eliminated. Okay, basically with this slide we come to the end of the class. The only thing we do not do, which we will start with next week, is the aspects of samples of non-audit engagement, the reviews and the like. Agreed upon procedures compilation.
Okay.
So I will start with that next week.
Next week.
Then we'll move to the next chapter.
Okay.
Yes.